What's up, YouTube family? It's your boy SK47 coming through with the analysis and the executions. Let's get into it. On the 1 hour chart, we got a couple of equal lows. Got this buy side liquidity right here. Got some higher liquidity up there, which I think market would crave for because it's too close to this one. And if it wanted to take that one in reverse, it would have just done that already. But it did not choose to go higher. So what I thought would happen was that it would come down to that fair value gap and then push higher, right? Pushing higher throughout the day. So here I just mark out my times for trading where I anticipate the big moves to happen, when I expect them to happen. And as I'm marking out the levels, market just starts moving aggressively to the downside, giving us an opportunity for a setup. So as I'm annotating my chart, I see that like market is moving aggressively. We just had this big down candle, and I thought we were going down to that lower fair value gap below the lows, and then we would push higher for higher prices. So I start looking for what sells on a lower time frame in the form of a fair value gap. I'm expecting market to trade up to that fair value gap and then continue to the lower side. So here I'm marking out my fair value gap, expecting market to head up to that fair value gap and then come down to the higher time frame fair value gap. So here I am with the short position, thinking that we're heading down for a continuation to the lower side. When I zoom out, I see this is a huge candle, then bam, stopped out just like that. But then market just aggressively pushed over my position, got stopped out, and I had a feeling that we would be going for those equal highs and ultimately just change the shift of the market for the day, and that we would no longer go lower for that fair value gap which I was targeting. So when a fair value gap is passed like this, I like to use it as an inversion fair value gap, because we can't just disregard it. So I was expecting what market to come back now to that fair value gap and treat it as what is known as resistance, and then push higher for the buy side liquidity. So this was my morning session set up for the London session. Market drops nicely back into that fair value gap which I had been looking for, but the thing is that it's kind of tricky to determine whether it's going to go to 50% of it or all of it, or not even go to 50%, and just touch it a little bit. So I just put my entry just below the wick of the fair value gap, the high of the fair value gap, because it wasn't even that much risk, I was thinking. But my stop loss was just too tight, and market ended up filling the whole fair value gap. I got stopped out. Wow. Had to enter again and then put my stop loss at a reasonable distance, risking 9 pips. Not a bad risk at all for like 32 pips, I think. No, actually it was 33 pips. So yeah, it was pretty reasonable. And I also knew that there would also be a possibility that we would go higher, and that will also increase my take profit as well, maybe into like 40 pips. It's all about managing the position. Yeah, so market starts trading back into the fair value gap, and then just takes off, takes off from the fair value gap like it never even left. Like I never even got stopped out. And it took off from there. So we just had a run on a short-term high right there, swing high on a lower time frame, and I was just annotating how I would like to see it pass that wick right there where I have the boss annotation, meaning that I'm anticipating a break of structure, because it has not happened yet to that wick, but I was anticipating it, and with anticipating it, I can also look to scale in another position. Yeah, I'm scaling in another position, which is also in a fair value gap and what I thought to be an order block right there. But then if you check, it's just before the 2 a.m. ICT London kill zone session, London Open. So market will tend to be a little bit sloppy just before the session starts. But as soon as the session starts, we can start expecting more liquidity in the marketplace maybe, and more volatility as well. And then it won't be as consolidative as it is on other times, because these markets move at a certain time. They don't just move, and you're gonna see that right now, right here. These are the breaks that really matter. We just had a break in market structure at 2 a.m. in the London session after a inversion fair value gap. Come on, man, not just like a random break in structure, and we just got some equal highs above us. This is just a clear sign that market is gonna take off. Imagine this is gold, XAUUSD today. Like, you imagine you're holding a position on this, bruh, or you enter a position on this. Just look at how it's gonna move from here, just by trading on the right time. Come on, bruh, come on. We just had some liquidity taken as well, but I'm not satisfied, with the position. I think that market can still go higher, take out that high for sure, and then I don't know, we can start looking for targets above that high, and I saw that fair value gap on the 15-minute time frame, which I could use as the next throw on liquidity. So yeah, I'm just gonna aim for like 39 pips. I was aiming for 40. I don't know why I took 39.
Obviously, still delusional.
But yeah, market ended up, doing its thing, doing the right things, at the right time, pushed up aggressively, and we ended up taking our profit. And then that was the end for me during the session. I was satisfied with my 40 pips. And then I caught it later in the second session, which I trade. I'm a 2 sessions trader. So I was back at it on the New York session. My record button wasn't actually on. I didn't realize that until I had actually executed already in a position. But we just had a position over of a fair value gap. We had taken buy side liquidity, the one that I had marked out previously, and we had broken structure. And now what I like to use, as a take profit is just the draws on liquidity. I don't use my Fibonacci for some reason. I don't know. I just look at the liquidity that's nearest, and those equal lows just looked convincing to me, like they're the ones. And we also had that fair value gap which burned me in the morning that we didn't go to as a target. So I thought that we would go back to it this time because it was pretty reasonable in the morning for me to see market going there, before going higher, go and rebalance that price. So in total, that's about 90 pips, which is like the big move of the day. That's not small. And imagine if you can do something like this every day, or like every week. I think that's like pretty good, if you're doing this consistently, getting like 90 pips, 50 pips, 40 pips. Pretty good, right? Here market starts to play around the first level of interest, which was a fair value gap, but I had not annotated it. I wasn't really thinking much of it, but it would have been a great place to take my first take profit at that point. I don't know what it is, man. I just like catching trades that just go one way. Even though it seems like it's a far-fetched thing, that because we have consolidations and whatnot. But most times the trades that I catch, they move, and that's how I like it. I don't like the back and forth. So taking off some trades also helps me keep calm, and actually hold the whole trade. So here I was just refining the fair value gaps that we now have on this side. This is not an inversion fair value gap on the right side. On the left side we have an inversion fair value gap, and this just gives me like more confidence in this level that market will return to it, and shoot for higher prices. Here is the actual execution. So you can see that I added another position. Now the whole position is safe. And there's nothing better than this. If you know, you know. If you know, you know. You know, when you got your trades in, your stop loss is protecting the trade. You don't have to worry about any loss. You're just gonna watch the price right down. With a target of 90 pips, 9,000 ticks. Wow. What is it? 900 pips? I don't know, man. Hey, is it 900 pips? I should check it out. So right here, I'm just preparing for the exit. You know what it is. Just bagged a total of 9,000 ticks. Man, that's huge. That's what she said. So yeah, that was basically it from me. Thank you so much for watching. Make sure you like, subscribe, and comment. Till next time.